Well, let's talk about GDP, right? Because that's the growth scare, which, of course, is the other one feeding into the markets, apart from all that is happening globally. Now, the government has projected India's GDP growth rate for the fiscal at 6.4% in its first advanced estimates, the slowest pace of growth in 4 years. But let's put all of this into some context. Latha is here with exactly that. Latha, over to you.
Yes, at 6.4, slowest in 4 years. But the bigger worry is that it is slower than Reserve Bank's revised 6.6. And remember, Reserve Bank began the year with a 7.2% estimate, which they held on till October, like 2.5 months back. The positive is that if you take 6.4 full year, we already know first half is 6%. So second half is definitely a recovery at 6.7%. That is Q3 and Q4, which is very good. At least that 5.4 is, that nightmare is not happening again. Let me come to nominal GDP because this is the first step to making the budget. Nominal GDP has come in at 9.7. The FY24 budget, 2024 budget had estimated 10.5% nominal GDP growth. So there, the GDP growth, the GDP number is 324.1 trillion, according to the advanced estimates. The budget had estimated it at 326.3 trillion. Now, why 2.2 trillion less? Means what? 4.9% of this GDP number will have to be lower. The budget had estimated it, the fiscal deficit, at 16.1 trillion. Now they have to cut their expenses somewhere. They can have a deficit of only 15.8 trillion, some 30,000 crores less. Not a big ask because apparently they're not going to get to their capex targets. The reliefs, the positives in this number is private final consumption expenditure. The one that we've all been ruining about, that's estimated to grow by 7.3% compared to what? 4% last year. So a genuine uptick over there. To be fair, in the first quarter it was 7.4. Second quarter, it fell to 6. So looks like definitely there is an uptick in the third and fourth quarters, according to the MOSPI. The other positive is that the rural employment-heavy sector, agriculture, has grown by 3.8% compared to 1.4% last year, which is very good because that'll mean a little more in terms of real incomes. But the same thing in urban is not happening. Urban, the biggest employment-heavy sector is what you call trade, hotels, transport, communication and broadcasting. Trade hotels is really big. And there, the growth is only 5.8% compared to, I think, about 9% a year ago. So, this squares with what the FMCG companies are telling us. Rural consumption recovering, urban consumption slowing, stagnating or even falling. And finally, capital formation is seen at 6.4%, lower than last year's 9%. But it looks like through the year, it is exactly the same number that we got in the first half also. So it looks like that will be steady. It is not that because of government spending, that number is getting boosted up. Looks like private consumption is not kicking, private capital formation is not kicking in. So it's an even 6.4% for the full year. Now, finally, there are people who told us that GDP advance estimates tend to be conservative because they are extrapolating from the first 8 months, which were not very good. Now, I therefore went back 10 years to look at how the advance estimates compare with the actuals. Okay, look at the record. For 4 years, they were higher than the actual numbers. 4 years, they ended being lower than what came out actually. And 2 years, they were bang on. So really, if anybody who thinks that, these guys are being conservative, not so. The record is fairly good in terms of advance estimates.
Okay, so it's fairly even, Stephen, there. Let's see if this time around, whether these are very accurate estimates or whether growth can actually surprise on the upside. That's what, of course, we will hope for, what the market will also hope for. Latha, thank you very much for that analysis.